When is the best time to buy Tesla stock? Everyone's buzzing about Tesla's 3-for-1 stock split and considering the stock's sharp move higher since the beginning of July. The electric car maker's shares may be catching many investors' attentions. In today's video, we take a look at whether now is the best time to buy this growth stock, or have the fast-growing company's shares already priced in best-case scenarios. Let's find out. Tesla's stock price closed at $891.29 on Wednesday, August 24th. The next day, August 25th, it opened at around $302. The reason for the drop in price of Tesla shares by nearly 66% isn't due to Elon Musk tweeting about demand for electric vehicles, full self-driving features, SpaceX updates, silly memes, or his legal battle with Twitter. The electric car company completed a 3-for-1 stock split after closing bell on Wednesday, August 25th. What this means is that one share now costs a third of what it did a day ago. Tesla approved the split in June, its second such split in the past 2 years. But before you start celebrating about how one Tesla share is now cheaper, keep in mind that nothing changes with Tesla's valuation. The company is still worth more than $930 billion after the split. Shares continues to trade at a lofty multiple of more than 70 times 2022 earnings forecasts, a huge premium to the valuations of traditional auto companies like Ford, General Motors, Volkswagen, and Toyota. As an owner of Tesla stock, suppose you own one Tesla share worth $900, you will now have 3 shares worth $300 each. A stock split is often a sign that a company is thriving and that its stock price has increased. While that's a good thing, it also means the stock has become less affordable for investors. As a result, companies may do a stock split to make the stock more affordable and enticing to individual investors. Amazon, Shopify, Google owner Alphabet, and meme stock GameStop have all done splits in the past few months. It's important to note that not all companies engage in stock splits. Some companies prefer to keep their stock prices high. Tesla is happy that their per-share price is high because it adds to the allure of their stock. Value stocks still have the opportunity to utilize stock splits to attract investors. In perhaps the most famous examples of a company avoiding a stock split, Warren Buffett's company, Berkshire Hathaway, has never split its Class A stock. In December 2021, the stock was trading at about $420,000. What happens when a stock you own splits? As a shareholder, you may worry that a stock split will affect your investment, but ultimately, there's little impact on you as an investor. And like we mentioned, stock splits are done to attract more individual investors to invest in a company. According to Robert Johnson, a professor of finance at the Hyder College of Business at Creighton University, it's important to remember that the owner is in exactly the same positions as before. Their ownership percentage is identical. They will own more shares, but each share will represent a correspondingly smaller percentage of ownership in the company. If anything, investors may actually notice a boost after a stock split. As the stock becomes more affordable and more people can trade it, the stock's price can go up. Does the average investor benefit from a stock split? Typically, stock splits are neither good nor bad, especially in the long run. When a stock splits, investors usually see an uptick in interest in that stock, but everything should settle down in a few days when the fuss is over. But if a stock split still worries you, consider investing a majority of your investment portfolio in an index fund or ETF, which is a collection of hundreds of stocks rather than just one. Experts agree that this is a better way to diversify your portfolio and save for retirement. Putting your money in lots of different companies is better in the long run when compared to just investing in a select few. Investing this way typically is a clear winner when compared to stock picking. Should you invest in Tesla post-stock split? Let's answer the important question in today's video. Is it worth investing in Tesla post the stock split? Well, if you're considering investing in a particular company, say Tesla, after a stock split can be a good time to do so. So, stock splits are generally a sign that a company is doing well, meaning it could be a good investment. Additionally, because per share price is lower, they are more affordable and you can potentially buy more shares. However, keep in mind, the key to being a successful investor is diversifying your portfolio. You might want to invest in other financial instruments such as index funds and ETFs first before individually stock picking. The S&P 500 Index Fund is a great place to start. Also remember that if you're investing in a company after a stock split, approach it with the same level of analysis and curiosity that you would any other company. While a stock split can be a good sign, it's important to do your research before investing in any company. Well, that's all for today's video. Hope you enjoyed watching this one. Thank you for